Well, it has officially begun. The banks are preparing for the crash, or scratch that, the worst economic downturn since the Great Depression. And my question to you is, cue the fire number 2 is, are you prepared for the crash? The banks are getting prepared, but Bravo, you don't understand the Fed. Jerome says we are going to have a soft and easy landing. Just like they said last time, Fed chairman predicts soft landing for the U.S. economy. New York Times, well, look at the date. That would be 2007. I think they may get this one wrong again. Oh, and breaking news from Capital One, what's in your wallet? Yeah, tell us, banks. Well, the banks already know you got nothing in there, as they brace for more consumers to fall behind on their loans and then going into default, coming after the cars and everything else. Delinquencies are rising, prompting lenders to add to rainy day fund. So we just got a slew of banks getting ready for the flood, which actually, this is not breaking news. I did this a day ago, GDP reports, but I missed something very important out of this article. Well, I mean, besides Great Depression warning signs, not since 1932, and how our GDP went from 7 to 6 to 5 to 4 to 3 to 2. But it looks like everyone still has money to spend on full sleeves tattoos, but that's okay. GDP better, data better than expected in Q3. Yeah, better than expected. This is what was troubling, the most troubling information. The GDP report, that was a struggle, is the precipitous drop in your money, your real disposable income, which fell over $1 trillion in 2002. For context, this is the second largest percentage drop in real disposable income ever. Well, behind that one thing, you know, that Great Depression thing, 1932. Yes. We also have one of the highest we do have the highest credit card debt since forever. One of the lowest savings rates since forever. Defaults on auto loans. They can't even get repo guys to go out there and get the cars. Now I'm saying this just started. It's just begun. And also, I got to show you some things on the charts. Bitcoin, you're going to go, oh my gosh. The VIX, oh my gosh. A lot of things. So make sure you stay till the end. Morgan Stanley says, don't buy the rally as Fed looms. That's this week. And I'm telling you, he's mad. And also, when it comes to why interest rates go up and down, it's the bond market and hedge funds. I am going to show you a chart again that goes back since forever. Everyone in the hedge fund manager zone is saying short this thing. And I say do whatever the hedge funds do. Just do the opposite. You'll win almost every time. But as this article says, Morgan Stanley says, don't buy the rally as Fed looms, right? And I would say just make sure you know how to trade these rallies, that you're not just, well, I guess this is the bottom. Actually, I may just close my S&P position. I took one out on SPY. I've been up 5 days in a row, but exit prior to Fed. It's almost like exit prior to earnings. But for all of you that are like, catch that falling knife on natural gas, you guys, this is all just a trader's market. Do not think you got game just because you listen to Jim Cramer. And I did want to just touch base on nat gas, because you're like, when can we buy? When can we buy? Well, this is going to be a pretty sweet swing trade, and I'll turn on my little swing trade indicator right there. That is the red one. The white one is the 200-day moving average, which it respects, and you are still far under the Bravo 9. But just in case you want to know how to do this, take advantage. Today's it. It's dry January, right? Are we almost done with my wife's birthday month? But grab that 70% off before it turns into only 60% off, and still no go on that nat gas. But if you subscribe to the channel, I will put that up, and I'm like, it's a go. Kind of like when I said on Roy, I said it's going to jump above that 200, and it's going to go up quite a bit. Congratulations. That was my call over the weekend, up over, I think, 15%. Just in case you don't say liar, liar, pants on fire from wick to wick, from Friday, 20%. Bingo. Now let me take you over to the SPY really quick. I said I wanted this to pop above the 200 like it did. I put in a buy. I really want it to retest. And let's see if we can move higher. Well, this pullback isn't freaking me out. And also patterns that I probably don't think will play out. I wanted to show you the VIX. You have a descending triangle on this that should play out lower. I don't know. But usually when VIX goes down, stock market goes up. Boy, talk about just throwing things in blenders when it comes to finance with news, right? You don't know what to do. Throw it in a blender, speed it up. Okay, I guess it's going to pop out this way. Stocks are poised to hit new lows this year. I'm going to bet on that one, but I'm still going to bet on a pump. Again, it's the charts. It's the macro. I think the market goes up, down, all around, and I'm going to take advantage of every single position. Survey Investor shows, which, as you know, I am not really an investor. I used to be. I still have things going back over 20 years just sitting there. That's SPY. S&P 500, I have no idea. That's my retirement account. Don't touch it. I just left it. But for the most part, I'm constantly having to move money, and it's usually completely opposite of what hedge funds are doing right now. Like, they have a record short. Look at this. On the bond market. Bonds are going down. And I say, well, hedge fund managers, you should probably look at the charts because I think bonds are going up. And I've been saying this since last year, actually October, November. I'm like, that is your double bottom. Whew. The left head and right shoulder played out actually a little bit lower than expected. Now you are in a, as it says up at the top, symmetrical triangle. If you want this to come on, I see again, I don't always buy it. I like to do my own charting. Lux Algo is saying symmetrical triangle. I'll give you that. 3 touches. Both sides. If you want to know where TLT is going, well, you're going to measure it. This is how I do it. I measure it right about there. Kind of. Here. There. Move that up. Apologize for the yellow. That's pretty ugly. Let me turn on my 200 so you can see about where this thing's going to pop, which it's right above there. We're almost there on the bond market. So you go ahead, hedge fund managers, and you just short away. You want to see the biggest short squeeze? Well, you're gonna. And then hooray, I get to close my position this year with a profit. And I think this was the only play that I have done on my channel that I said this is going to be at least a 1-year trade. So don't hold me to it. Talk to me next year, all right? April Fool's Day. I'll let you know. The rest of them, I'm in, I'm out. I'm in, I'm out. And I did say that I would mention the good old lovely Bitcoin. Guys, we're still in a downward trend. I know you're above the 200. Congratulations. Now find support, head higher. You can't be in that Lux Algo zone, which you're way above. This is where everyone should be taking profit or closing their positions. That was a falling wedge. We broke out of it. See that red line right there? You got to get above that red line. That was previous support, okay? Now it is going to be gnarly resistance. And at a minimum, that red line, you got to get above that one. Find support, okay? Then head higher. But this kind of BS, I'm giving it to the whales. But again, who do I know and what do I know? I could be completely wrong. I just follow the charts and I have to wait. I know it's a waiting game. It's painful too. You're like, does that really say that Bitcoin's at 22,000? Gosh, I should have bought it at 15, right? Should have bought it at 15, sold it at 22, but what did you know? Well, except if you were subscribed to my channel, I told you months ahead of time, falling wedge, it's going to break right there. Put your little buy on, okay, then close your position. But you could have made a little bit more, but it is what it is. My end game is make sure that I have accumulated before that white line. No, I won't go into it. And then that is also support way down there that goes all the way back. So we are finally in that zone where Johnny Bravo can start accumulating on the way down. But just know this is a risky, risk on, very highly manipulative, not so much a store of value or wealth, especially when you were just at 70,000, but they trolled you at 69, and then it comes down to all the way down to 15. Yes, Bravo, but if you just look back at the whole history, I know, I understand. That's why I get in and I get out and I take profit. Also, you rolled over, or right there. I mean, let me zoom in and help you. Okay, so you see that? That's called it converges and diverges, or diverges and converges. I think it's the first one. You've already crossed. If I move that line, see, if I zoom in a little bit more, that's it. This is where you close your position. We're heading lower. Also, that red line and that other red line over there, that was a negative divergence on the 4 hour. If you do my bear market course, 70% off, all of this will make sense to you. So will that little red line. So that way you don't go over to crypto channels and just get FOMO'd and go, oh my gosh, I gotta buy. Then they say link in the description for whatever it is. Give the exchange your $10,000 so you can leverage 100x and lose all of it plus more. And boy, oh boy, was there so much money to be had for these exchanges, also to lose and to scam and the government does not like your altcoins. I just saw a pretty gnarly article. If I can remember, I'll go back to it, but they are coming for your altcoins. If it has a CEO, they're going to get you. Big banks set aside billions. Your banks are preparing. Here we go. As they brace for a downturn. Well, that's weird because I'm looking over here. It says Fed chairman projects soft landing for U.S. economy. Except they have not got it right one time. The country's largest lenders increased their reserves to protect against deteriorating economic conditions this year after reporting a resilient profits for the end of last year. Well, that was last year. Let's not look in the rear view mirror and let's look at what's called an inverted yield curve that has predicted a recession every single time. And on this channel, I try to help you prepare for what is to come. And in the now, okay, make some paper trading money. And when everyone's FOMOing in, like they were on Bitcoin, right? I'm like, it's time to FOMO out. Take your profit. No, you don't understand. I do. I follow charts, just like with this last pump. Take this last pump and put it back with the other last pumps. Same thing. Investors who bet on Bitcoin fund in retirement accounts. No! Pay the price, 42%. I actually did put in just a small, bookmark it on some of my trades. I put it in a short on Bitcoin, I think 22, 23,000. I also hate how the IRS is like, did you make any crypto trades this year? Here, fill out these 20 forms. And why is that? Because they are coming for you. They don't hire all those IRS agents for nothing. And if you watched yesterday's video or the video before that, I have said that it will be worse next year than it is this year. And it's going to be worse the following year and the following year after that. How do I know that? It's because how this system is created. It kind of makes it pretty easy to have a channel. I can be 100% accurate 100% over time, even though, the market went up today, Bravo, you said that it's going to go down. Okay, over time. And there's a big difference between the stock market and the economy. The economy, it isn't. All right, just kiss that goodbye. Stock market, ways to make lots of money in that. Just ask anyone who does. Even on $100,000, you guys are that's what I get, 100 grand. More Americans, actually 100 plus. And I know a lot of you on this channel, because you're financially intelligent, as I go cuckoo, you're financially intelligent. And you probably, most of the people on this channel, make over $100,000. And you're like, it's tough out here. I know. I have kids that make over $100,000. And it is like paycheck to paycheck. More Americans are living paycheck to paycheck. And if you would have told me that, I don't know, 15 years ago, you remember, ladies and gentlemen, you're like, man, if I could just make $100,000 a year, wouldn't that be great? Now you do, and you're like, shoot. And that's why I always say, that's my only solutions. I have start businesses, whichever ones you want to do. Try to get a more passive income where you can also hire people. Okay, you do that, and then you trade equities. And then you understand macro, and you can kind of trade big cycles. But even like I showed this the other day, this is crazy. Over 20-something years. Year 2000, medium income, 31,000. What is it now? This is 23 years later. You're at 35,000. Congratulations. But I'll tell you what has gone up, everything. I mean, is my home there? One from 161 to $500,000. Do you see? It's almost the way the system is designed to keep up. You got to paddle so hard. And I told that to my little woke high school kids, and they're like, this guy, yap. I think it was only my high school students that actually I'm going to start a business. Good job, man. Good job, Jake, who started Movement Watches and sold his company for $300 million by, don't have any money. Well, let's just crowdfund it, and then you crowdfund it, and then other people give you money, and you make a watch from China, and you sell it to Americans, and then you exit at 300 million, then you probably sit on the couch and you're like, what do I do? But I guess that beats making $31,000 a year. But that is from job. You have to start businesses. That is my only solution. It's hard. Life sucks. I get it. The monetary system is designed to take you out of the system. And all I can do is work every single day of my life, giving you the understanding of how this all works, what's happening today, and how you can profit from it. You're welcome, and I'll see you tomorrow.